Now, last week on Talk Africa, we unpacked the roots of the global financial system and heard why, for many African countries, the system has failed to deliver on its promise of growth and stability.
We looked at how institutions like the IMF and World Bank were created without Africa in mind and why decades of reform calls have brought so little change.
Now, this week, we turn our focus to the future. If the current system does not work for Africa, what are the alternatives and who is building them? From new regional financial institutions to the launch of the African Credit Rating Agency, African-led solutions are taking shape.
But first, let's take a moment to hear what some of our panelists had to say last week.
First of all, the time these institutions were formed, what are popularly referred to as the Bretton Woods institutions, they were formed when the West was largely colonizing and seeking to colonize Africa. So in their mindset and in their thinking and infrastructure, their approach to Africa is about extraction.
Africa needs to generate revenue, enough of exporting raw materials and commodities. Because when we export raw, we don't add value and we leave value on the table. So we need to increase our revenue base. If we don't increase our revenue base, you know that 3% we contribute to the global economy?
Right.
3% is not a lot of power. So until we increase that for ourselves, we cannot get as much voice and power in the global economy. And lastly, we also need to link our investments. When we borrow our money, we need to link it to investments that yield over time. So they need to have returns such as roads, energy, power, education, healthcare. We can find out that when you invest in these sectors, over time you get a return for your investment.
IMF, the World Bank, don't just go to these countries. These countries actually approach them. And they write very elaborate proposals in their notes on here is what we're committing to in order to unlock this level of funding. This is where we're going to spend it.
We'll also look beyond Africa to South-South cooperation and BRICS and ask whether the Global South can reshape global finance on its own terms.
And at the heart of all this is leadership, because even the best systems need visionary leaders to steer them. So what kind of leadership does Africa need to truly achieve financial sovereignty?
Welcome to the second part of this special episode of Talk Africa, co-produced with TV47 on the global financial system. I'm Hibak Said from TV47.
And I'm Beatrice Marshall from CGTN. This week on the program, we explore African alternatives, South-South solidarity, and the leadership it will take to build a new financial future.
We have a lot to discuss, so let's dive straight into our panel. Here with us in studio, James Shikwati, who is the founder of the Inter-Region Economic Network, and Churchill Ogutu, an economist of IC Group.
And joining us from New York via Zoom, Dr. Meshach Mutize, lead expert on support to African countries on credit ratings agencies. And also joining us from Beijing via Zoom, Professor John Gong, professor at the University of International Business and Economics. And here with us, we also have an audience of experts from the African Development Think Tank and students from the University of Nairobi participating in this discussion today. Thank you all very much for joining us in this discussion. Let me start off with you, Professor John Gong, because we're talking about alternatives for Africa when it comes to seeking financial solutions. Financial sovereignty for African countries has really become a critical issue, particularly with the changing global order. In your view, what steps can the continent take to reduce reliance on Western financial institutions like the Bretton Woods and find alternative financial solutions?
Well, let me first start by briefly summarizing the new landscape we're faced with right now. That is mostly related to the policy, the trade policy, the monetary policy emanating from Washington. I think what President Trump is doing is essentially to upend what's called the rules-based international order, at least in the trade area, in the economics area. I think President Trump wants to replace it with a sort of a U.S.-centric a set of bilateral relationships between the United States and every other country, and on his terms, of course. I think what it means is that many countries, as we've already seen, are going to be faced with a much higher tariffs for those countries that have a major trade relationship with the United States. And the consequence of that is that it's getting, the foreign exchange reserves is going to be diminished as a result of more difficulties associated with exports to the United States, particularly those countries in the developing world, especially I think in Africa. Even those countries, these are the set of poorest countries in the world that used to enjoy a zero tariff status with the United States as part of the AGOA agreement, now is facing a totally different reality. This is going to be out of the window. So I think from that perspective, I think a lot of countries' foreign exchange, the exchange ratio is going to be under immense pressure. And I think the solution for that is moving towards a multi-currency world,
right.
which has already started, and I think it's going to be accelerating right now. And I think that's probably the solution that I have in mind for a lot of countries in Africa.
So, Dr. Mutize, I want to get your view because there are now quite a few alternatives for the global South, unlike 60 years ago. So, from where you sit, though, what steps can the continent take to reduce dependence on Western financial institutions?
It's the reason why we are here in New York to advance the need for reform in the global financial architecture. And we did the same also in Washington during the spring meetings. And to me personally, I think that the discourse is ripe that there is need for change in the global setup. And I'm sure in the preceding discussion, there was a highlight on why this is a legitimate call for that to happen. But maybe the big question is there willingness for that transformation to happen, for that architecture to rechange, to be reshaped? Because if you engage with the institutions that are at the center of driving this global financial setup, they seem to be a little bit resistant for that to happen, in as much as there is a broader need, which is undeniable and legitimate, that there is need for this change, but there seem to be some resistance, even when the provisions for that change is clear before us.
Right. All right, let me throw it to you, James. Let's talk about homegrown solutions. We do have African-led institutions such as the Africa Development Bank and many others that are coming up. Maybe tell us some of those institutions that are going to help us get out of this challenge so that we're not as reliant to foreign-led institutions.
Yeah, I'd like to put it in historical context, first of all, that trade in Africa, financing in Africa did not start with the Bretton Woods. Africans were trading before. They had ways of paying for the goods, whether it was trade routes in the West Africa or the Swahili trade routes here in the East African region and Southern Africa region. One key component that used to drive that kind of trade was trust. Trusting that the good will be delivered and it will be paid for. But historically, when Africa, of course, engaged with other countries, slave trade became internationalized. And then, of course, if you recall, ivory trade as well. And in the process, the trust levels went down because each community now was suspecting that the slavers will be using the other community to come and raid them. And as we speak, Africa suffers a huge trust deficit. And that's part of the reason why the 54 nation states, even when they meet and negotiate and agree and sign on to paper, that traumatic memory of the past keeps coming back. And then you get trust levels going down, whether it's in the East Africa region or in the West Africa region. So I think the first thing to deploy is the diplomatic channels within these 54 nation states to build trust because without trust, the rest you can write, you can launch, and nothing happens. Then, of course, second, as we push the diplomatic channels, then we go to the Africa multilateral financial systems, as you've mentioned, the Afrexim Bank, the Africa Development Bank, and other institutions that Africa Union has been putting in place so that we actualize. But to actualize, trust is needed. And to get trust, we need to go back to our political leaders. The biggest challenge we have, our political leaders are in survival mode. They want to win elections, and they keep making promises, and they want to deliver on what they cannot deliver. So there's a lot of rethinking that is needed internally, even as we think about the externality of our financial challenges.
Right, so let me come back to you, Dr. Mutize, because your sentiments are that there is resistance from the IMF or other global institutions for Africa to chart its own path. But I want to find out from you, where exactly then are Africa-led efforts to do this for themselves?
One of the issues that come to mind is, the bilateral arrangements that our member states have in some countries or some institutions outside the continent. So I tell you the complexity of this because I've been in the African Union system for some time, and we have tried to incubate this project on the Africa Credit Rating Agency, which came out of the decisions of heads of state and government that we need this institution. But when we developed the framework then, that this is the framework that we are recommending so that this institution can come to fruition and achieve the purpose that we want to establish for. It took us about 5 years for that to happen, just to go through the policy organs of the African Union. When you have a heads of state decision that we need this institution, so for you to go through the policy organs, for that to be accepted, so that you can put the framework together, it took us so long like that, because each of the member states has got its own interest based on the bilateral relations that it has. We had some of the member states actually pointing that we don't need an Africa Credit Rating Agency. It has the same fate also that has suffered the three multilateral institutions of the African Union, the Africa Central Bank, the Investment Bank, and the Monetary Fund, because the member states are just not ratifying to the protocols. So you find this complexity is that some people have chosen to call that it's a spaghetti bowl, because you've got so many interests that are intertwined that people are not willing to entangle from. But thank God that we have at some point come to the intersection of interest, and those that might not find it useful at this point have accepted that we need that policy position. Right. Whether this institution becomes as strong as we want it to be or not, but let's start it in the first place, which we think is very important. To start the institutions in the first place, and then you see how far it can go. And in our view, I think it will be possible to get the consensus to support such institutions in the future. Because if that is not available, if that is not done, you find that the current setup is in the best interest, and that's in the best interest of those who establish it, and that's why they are being weaponized to drive the agendas of what my colleague have just mentioned earlier, that they want to advance their interests from where they sit, not where Africa want to be.
Right. All right, Churchill, let's talk about regional integration a little bit. We do see that there is the need to scale up African-led solutions, and financial institutions need some help. What are some of the things you can do to speed this up?
A number of issues needs to be in place, at least to ensure this integration within the financial institution is quite done in a speedy manner. The macroeconomic environment needs to be quite stable. I've seen some volatile periods of inflation, and also some of them are quite external factors coming into play, things such as drought and famine. I mean, this region is quite prevalent, these spikes in weather patterns, and they tend to bring some of this instability within the macroeconomic environment. So that has to be in place. And also speaking even to the political environment, we need to ensure that there's that stability. Yes, there's an argument that needs to be made that there's some heterogeneity within the African continent. We can't slap like all countries needs to be a democracy. That can't be the case because of just recognizing the different cultures within the continent. But that notwithstanding, there needs to be some form of some stability. So those are the underpinning factors that needs to be put in place. But fundamentally, what now needs to drive the financial inclusion, the integration, there's now the financial architecture also needs to be quite robust. And I'm speaking about issues such as the banking system. Well, we find that it's still some parts of the continent are quite advanced within the banking system, this whole financial system. Others are now trying to bring about financial inclusion with the mobile money. So it's growing gradually, but still this we still aren't at par in terms of advancing the financial systems, and also the non-bank financial institutions needs also to come along, things such as credit unions, SACCOs, and all that. So at least to be able to build this whole financial system. The other bit around that is at least you've seen some progress around the payments and settlement services. On a regional basis, we also have the country level and also regional level. For instance, this part of the continent, we have the East African payment solutions, and also taking it a step further, we have what is the Pan-African payment and settlement services. So that ensures that if you are trading even within the continent, one part of the continent with the other part of the continent, it ensures that there's that seamless payment settlement. So I think those, if are harnessed, it will now be able to be a fertile ground even for financial inclusion and also for the multilateral development partners to be able to take it a step further.
So Professor John Gong, I want to get your insights really in terms of boosting intra-Africa trade, particularly with the creation of the Africa CFTA, Continental Free Trade Area, and learning from some lessons from groupings in the Far East, for instance. How do you see that happening if Africa is to become self-sufficient and for the Africa CFTA to get its full potential?
Yeah, well, I actually published a paper in this regard in a journal called The World Economy. One of our findings is that there's actually a lack of infrastructure related to intra-Africa trade. For example, let me give you an example. We're talking about the trade between, let's say, Malawi and Congo, right? They are neighboring countries, but it's so difficult. There's not much of a highway that can link the two countries very easily. You have to go through, very difficult sea routes to go to the other end of the African continent. This is the one example I'm talking about. Other than hard infrastructure, there's also a lack of what we describe as soft-based infrastructure to support intra-Africa trade. Exactly the things we're talking about. The payment system, the settlement system, the customs clearing system, and all these sort of the supporting services associated with trade. The long way to go to develop these things. Regional economic integration is always good. I think a lot has to be done in that regard to facilitate intra-regional trade, among African countries.
And maybe, James, when it comes to financial integration and even having the same trade policies, we do see that there might be challenges in that sector. How can harmonizing trade policies and even developing a shared financial market strengthen Africa's economic resilience?
Well, we can use East Africa Community as an example because it's actually aspiring to have a common currency in East Africa, and in East Africa there's been an attempt to have free movement of goods. I say an attempt because countries still slap duties against each other on eggs and milk. But I think the starting point is growing the local market, because when you grow the local market, when people start trading, then it makes it easier for you to talk about the next step, that we can have a common currency. But as it's been pointed out earlier, example Malawi and Democratic Republic of Congo, if there's no connection at all, even if we had a payment system, it won't add much value because people are not really transacting. So I think there's infrastructure aspect, and there's the point of having deliberate effort to build the local market, not just having a policy aspect. And the biggest challenge for me really is the execution. Because if we visit all these regional economic blocks in Africa, they have very good plans, very good strategies, but then they are somewhere on the shelf. So getting them executed, getting them to be implemented, I think that's the biggest challenge, which I highly doubt that Africa Union can take that mandate to execute, but it's easier to start at regional level because people are closer to the region. They have traded before historically, so they are not coming together courtesy of matters of policy. Then secondly, is to try and follow what the private sector is doing. You'll notice in East Africa, again, as an example, there'll be Kenyan companies investing outside of Kenya. For example, banks in Democratic Republic of Congo, in Uganda, there'll be retail stores in Tanzania. So if we follow the footprints, we've seen even Nigerian banks in East Africa, we follow the footprints of these pioneers, the private sector, and then ride on that to build an infrastructure that can then give us a financial system that works for us.
Right. So, Dr. Mutize, I want to come back to you on these African-led efforts. And we talked about the African Credit Rating Agency launched in January by the African Union. What impact will this have, though, on investor confidence and borrowing costs for the continent? Because we know that Africa is often seen by the Bretton Woods as a risky investment destination.
Having an agenda to establish an Africa Credit Rating Agency is to, number one, educate the market that provide funding that Africa is not as risky as you perceive. Mm-hmm. So when you educate the market, because remember, the market, the financial market trade opinions and they trade perception, and that is driven by the perception of risk. And that perception of risk is normally ignited by institutions that are perceived to be credible, providing information to market participants. So we are bringing this institution as part of the broader ecosystem of financing to be used as a benchmark, even by the big three rating agencies whom investors solely depend on for credibility, as a benchmark to provide more comprehensive information that might be lying under the radar of the big three rating agencies, which drives the perception because of many other factors, including one which has been highlighted many times, that they are not operating from Africa, so they don't understand the context of Africa.
Let's now get a comment from Duncan. Duncan is from the African Development Think Tank. Duncan?
I think I concur with the speakers of their concerns and sentiments before me. The only question we need to ask ourselves from an African perspective is it possible to increase liquidity without increasing borrowing? And a number of measures come to mind. When you look at one of the instruments like SDR, if the allocations of SDR to these less developed countries are increased, in the interim, even as African countries try to look at different alternatives, that could be one of the areas that can also be considered. Secondly, there are also some trust issues that needs to be looked at if Africa were to trade with itself. Because you ask ourselves, even if Africa were to continue exporting raw materials to the outside world, these raw materials go to develop those outside world more than the originating country. Case in point, if you look at the EPZ case in Kenya, where we export clothes, these clothes find their way back in the form of mutumba many years after. So there are a lot of basic structural things that we need to sort out as Africa, even before we were to look at alternatives. Because even if we have to go to other alternatives, if we don't address the systemic challenges that we are trying to run away from these developed, these Bretton Woods institutions and other lenders, we would find ourselves in the same spot. So there's still some work to be done, even at internal, regional level, because we are not at the same level of development. Thank you.
All right, very interesting discussion. We will continue in a moment, but for now, we will now take a short break, and when we come back, we'll explore what South-South cooperation could mean for Africa's financial future, what kind of leadership is needed to drive a real change, and how the Global South can shape a system that works for all. To stay with us.
Welcome back to Talk Africa, and let's continue with our discussion. Still with us, we have James Shikwati, Churchill Ogutu, Meshach Mutize, and Professor John Gong, and also our audience of experts and students from the University of Nairobi.
Right, so Professor Gong, let's talk about South-South cooperation, because it has gained momentum with initiatives like the BRICS grouping and the Belt and Road Initiative. Talk to us about the opportunities these partnerships offer for Africa, particularly in terms of alternative financing, trade diversification, and reducing dependence on Western-controlled institutions.
You know, we are increasing in a world that the Global South cannot rely upon the Global North, I would say. You know, United States is drawing from this rules-based international order. You know, you barely see much investment from American companies in Africa these days. I think we are entering into a new world. And also, we have to keep in mind that, you know, I'm speaking from China's perspective, China always regards itself as part of the Global South. And no matter part of the developing world, no matter how much, you know, this country's economic development has reached. Mr. Deng Xiaoping, you know, the former leader of China, who actually adopted the open door policy and adopted reform, started the reform era, had a very famous saying that China always sides with the developing world. So I think, you know, as we can all see, observe very easily, that China is increasing its investment on the African continent with, you know, infrastructure projects, as well as, you know, bringing manufacturing operations into Africa. I think you know, what's happening in China right now is that there's a increasing pressure, you know, to move some of the manufacturing out of the country, not just because of the, you know, economics, fundamental economics at work, in which you know, China is seeing rising wage levels, rising costs, and all these things, but also as a result of you know, geopolitical play from Washington, the tariff strategy from Washington. So I think there's a general trend towards, you know, these manufacturing activities moving outside of China. Where it's going to go, I think Africa is a very good place. I think I would even argue, especially East African, you know, English-speaking East African countries. You know, I think, you know, if you're talking about economic development, South-South cooperation, there are these opportunities, I would say.
And let's talk about financial integration and even financial sovereignty when it comes to African countries. Maybe tell us, James, how does this come in when it comes to investments and sustainability, infrastructure growth, technology development? How exactly can we leverage on South-to-South cooperation?
Yeah, I think under the current situation where we've seen United States of America slapping tariffs to virtually all countries all over the world, it gives Africa an opportunity to leverage on what I'll call what we've seen China offering as a predictable partner. Because right now, United States, which has always been the predictable to go to country, seems to be not predictable to Africa. So I think we can start building from the fact that China has shown it's predictable at the moment, and therefore we can build a narrative that the South can offer a predictable alternative. And narratives are important because it's a narrative that will give the global South the confidence to wade into the unfolding new global order. And building on to that, we already mentioned that we have a deficit of infrastructure if we want to engage in matters related with trade, and especially continental free trade area. We can leverage on the fact that China is good at delivering infrastructure and task China to deliver the infrastructure. Then let's talk about the cost of this delivery. And then we can look at the fact that whether emerging or industrialized country, in all their strategic plans, they have Africa in mind. Why? They want to get our mineral resources. They are looking at our population come the year 2100 as a potential of a big market, 4 billion people, youthful people. So if we leverage on our areas of strength to negotiate, I think we can open up the intra-Africa infrastructure challenge, which will eventually, of course, tackle the issue we are raising on financial architecture.
So let me come to you, Churchill, on that question of leadership. And we've heard about the complexity of getting regional policy adoption by virtue of the fact that the continent is so vast. Even with a reformed or an alternative financial system, the quality of leadership is key, and there must be political will. So what kind of leadership is needed if Africa is to push through, its African economic independence?
I think at the heart of it, we need visionary leadership. Remember that we have the AU, the 2063 agenda that is right here ahead of us. But I find that for most of the countries, as was earlier mentioned, this short-termism that tends to come by. As each and every political regime comes in, they have their own sets of campaign agenda, which sorts of detracts them, even within their own internal economic blueprints. We have quite a number of countries following that, and also those feeds into the African Union 2063 agenda. So I find those, without a lack of visionary leadership, it detracts us from achieving those. And then in terms of regional cooperation, you find that, yes, this different leadership styles across the continent. Case in point, you look at the Sahel region, the West African bloc, you find that they are within the ECOWAS bloc, so they are trying to form some form of regional integration, but then you find that this coups that happens, so it disintegrates even the kind of regional integration that is being pursued. And even regionally, other places, it's not as volatile as what we are seeing in the Sahel region, but also within other calmer regions, we find that there isn't that unified kind of visionary to achieve that particular agenda to be able to be unified, and that is goes back towards the lack of the vision. Tends to be a bit distracted. People are mistrusting each others and yet their neighbors. So those are the things that are derailing Africa as a whole to be able to achieve this kind of the leadership that we desire, that can now be able to take us forward.
So Churchill, even when we talk about alternative sources of funding and money management, there's always a question of whether African countries are able to pay back that money. How do we make sure that the funds are well managed and that African countries will have the capacity to pay back the loans? And
this is coming on the back of some of the defaults you've seen on the continent. We saw Ghana, Zambia defaulting, but at least they've been able to restructure those debts. And right now, Ethiopia, the restructuring is still ongoing. So it's quite timely conversation around how African countries are able to service their debts. On the short term, we've seen that they are employing what you call a number of debt management solutions. Case in point is what you call liability management strategy operations. So they have this high refinancing needs that is coming up on the short term. So it's pretty much kicking the can down the road by just employing some new debt to replace this debt that is coming due. So that's what we call liability management operations. So a number of them are doing that, but on a more durable manner, at least to reduce the debt burdens. So at least they need to look at their macroeconomic environment. More so on the external debt, they need to improve their exports so as to be able, because you have external debt, but you need to service the external debt, but you are generating revenues in local currency. So you need that exports, at least you get external revenue to be able to service the debt or increase your level of foreign exchange reserves. More fundamentally, it's now just to ensure that your growth is more sustainable, so that it increases your debt carrying capacity. So those are on the more long-term, on a more long-term basis, but on short-term, liability management operations are being conducted.
Right, so we're going to take a couple of questions from the floor. Let's start with the lady at the front.
My name is Sylvia from the University of Nairobi, and my question goes to James. Even as African countries are looking for alternatives, do you think, or would you say that some of the geopolitical relationships that African countries have with foreign countries, do you think they influence whether we will go for these alternatives?
Yes, geopolitical relationship influence the types of strategy a country or a region takes. But Africa is not unique. Even other countries, other regions also are influenced by geopolitical forces. So the point is to leverage to our own interests. Now we've seen, for example, the tariff war. How can Africa leverage on that tariff war to create its continental free trade area to accelerate trading within? We are talking about now the financial system that's mostly Western dominated. Of course, geopolitical interests are here at our doorstep, but how can we leverage on those interests to grow our own system? And that's where we're talking about the need to go south-south, the need to leverage on BRICS system, the need to open up for other players. For example, bilateral players that I gave an example of China that are very good with infrastructure development. So the point is not to run away from geopolitical influence, but to study it, to understand it, and leverage on it so that you address the interest of Africa.
Let's take another question.
Yes, my name is Ogembo Isaiah. Why can't we as Africans expand our CFTA by actually trading within the continent, where we will build as a good supply chain for the Africa, which will lead to reduction of dependency rate on the Western market, financial market.
Dr. Mutize, how can we expand CFTA?
It starts with the political will to do that. And I think we have that consensus politically that there is need to drive the growth of African markets in all shapes and forms. And when that happens, then it comes to the deliberate action to create the regulation platform, the frameworks that will solidify or put some parameters on how that could be done. Because that's also one of the main leverage that investors will look at if there is deliberate a legislative and regulatory framework to ensure that there is accountability if things don't go the way that they expected. So once we have that deliberate framework, which at the moment a few countries has in place to be able to sustain the kind of a market in terms of the financial ecosystem that we envisage according to the international standards. So once that is in place, then it creates the kind of confidence which you might want to call trust or credibility that international investors then feel comfortable to bring in money into that environment for medium to long term.
All right, so we're going to get final comments from Members of the panel, let me start off with you, Professor John Gong, as you make your winding up comments. Some of the critical measures that you think Africa should be looking when seeking alternatives for financing.
Well, I think at the end of the day, the solution to this big problem is that should rely on yourself. I think, this is the most reliable solution. I think, intra-Africa cooperation is very fundamental. And I think there's a lot of room to develop in this area. And I think it's also very important to work with other countries in the global South community to attract investment, to attract businesses, and develop an economy that's geared towards growth, geared towards exports, geared towards human development.
Dr. Mutize, very briefly.
Yeah, I think it's impossible to talk about, completely removing ourselves from the international financial architecture. We are part of it. We have to keep on pushing for reforms in the current system whilst we're developing our own institutions that will be able to fill in the gap when such a reform happens. Reforms in the structure of the IMF and the World Bank, as well as the leadership of such institutions, and also, the issue that I've mentioned on special drawing rights. Those are low-hanging fruits that if there is willingness to reform, it should be accommodated.
All right, James, you have the final word.
Yeah, I would say that first is to have the situational awareness that those who benefit from the status quo are not just going to accept it to go away in Africa's favor. So whatever we do is to, of course, leverage on the existing, but try to create more space for other actors so that there's competition that can then lead to the desired results from the existing financial institutions plus the new ones that are emerging, because as the world is showing us, we are not going to be stuck with the Bretton Woods institutions as we go forward.
What an insightful conversation. It's clear that while Africa faces major hurdles, there are bold ideas and homegrown solutions that could reshape its financial destiny.
The question now is, will the world listen, and will African leaders rise to the challenge?
And that's all we have time for on this special edition of Talk Africa, co-produced with TV47. A big thank you to our guests, James Shikwati, the founder of the Inter-Region Economic Network, Churchill Ogutu, an economist of IC Group, Meshach Mutize, the lead expert on support to African countries on credit rating agencies, Professor John Gong, a professor at the University of International Business and Economics. Also, thank you to our audience of experts and students from the University of Nairobi.
And remember, you can be a part of this conversation through our social media platforms on Facebook and X. And you can watch this and other editions of Talk Africa on our YouTube playlist. Do join us again next week for more Talk Africa.
I'm Hibak Said from TV47.
And I'm Beatrice Marshall from CGTN. From all of us here, thank you for watching and see you next time.